Good day, everyone. As we wrote in a recent report, there is the quick and there is the dead. And in today's markets, 1 or 2% correction in the majors can become a much steeper correction, of course. But meanwhile, many leading names can easily correct several percent on just a 1 or 2% market pullback. We've seen this repeatedly. Especially over the last couple of years. Names that are showing some form of strength often are 1 or 2 day wonders. So this Trump rally hasn't necessarily made riding trends any easier. That said, it has made profits a bit more plentisome because, as you can all see, our focus list certainly has expanded. And a number of those names had quick profits in certain cases. So partial profit taking would have been warranted, for those who are still sitting with partial positions or even full positions, because again, some people might have longer time frames, that's okay, just keep your stops tight. Risk management is the #1 rule when it comes to investing. Ed Seykota, you would say it's #1, #2, and #3 rules of investing. So protect your downside and let the upside take care of itself. Back in the day, it was Livermore saying the mighty are the ones who can sit tight and be right, but this is not that kind of market environment. I'm sure we'll return to that, but with QE having distorted things since 2009, it's made things a lot choppier, a lot more go nowhere, and that's why we've adapted, as we always have to, just to stay, it's a survival mechanism. That some years ago we started advocating selling on strength if a stock gets ahead of itself. You do get the one-offs like NVIDIA that, as we wrote in a number of reports, it never got ahead of itself in its price, and you could switch to the 7-week rule as your selling guide. And for those who don't know what that is, you can check that out in the FAQs. But that would have kept you in NVIDIA for the bulk of the move. And then it had a very telltale signature top, at least an intermediate term top. And we love that. We love when the market hands us a stock that performs just right and then allows us a graceful exit. And now it's, of course, we've mentioned it's potentially setting up for short selling activity. But at any rate, the market's gapped up after Trump's speech on Wednesday, and the question still remains whether Trump can pull off an LBJ or Reagan in terms of getting his policies through. Just because there's no congressional gridlock doesn't mean that all of his policies will get through. I mean, even Reagan took time to get his tax reductions passed. We might remember the steep recession of 1981 and 1982, and finally in August of 1982, that was a year and a half after Reagan took office, the markets embarked on one of their longest bull markets in history. So at any rate, price volume action always rules all in terms of handling your stocks. Certainly, market averages will do their thing. And if you're market timing, the market averages are obviously more important than stocks, but stocks can give you some kind of clue as to potentially the degree of the pullback before it occurs. We've seen that a number of times. If some major leaders start to break down, obviously that's a major red flag. So far, as we've indicated, our focus list names are showing some signs of wear, but as we wrote earlier today, if you're sitting in partial or full positions, that's okay. Just keep your stops tight on these things. I'll go through just a couple names here. The first one is VEEV, V-E-E-V. That one we mentioned kind of had a wild ride on Wednesday after reporting earnings, and it's back to support on lower volume than Wednesday's. Well, yesterday it was back to support on lower volume than Wednesday's big post-earnings day, and right now it's sitting near its 10 and 20-day lines. Those lines are converging. So so far, it's right at support. Obviously, you want to keep your stops tight if it breaks those two moving average convergences. Another name is Box. That's been was hanging by a thread earlier today. The volume was appreciable, and it looked like it wanted to push through the 50-day. But now it looks like it's achieving some sort of bounce. But obviously, keep a close eye on this one. GCOS, it's another one. Glaukos Corporation. That one, of course, as we mentioned yesterday, it could be a viable gap up, but it never turned into one because it showed a lot of weakness from the start. And that's why you have to be careful where you buy these things. Closed near the low end of its trading range, which is obviously not very bullish for the stock either. So right now it's back into its little sideways pattern, and it's trying to get support at its 10-day. So we'll see what happens. That has been a very powerful biotech. That said, I mean, if you look at the weekly on it, it's got a good strong uptrend going on, and a fairly clean pattern on the breakout in December into January as well. So I think the stock still has potential room to run, but obviously you want to keep your stops tight and look into potentially picking up shares in this or any name on constructive weakness. Right now the volume is 301% on the day. So it's fairly appreciable selling volume. So again, keep your stops tight. We don't know where this one's going to go. But if it stabilizes here and you don't have shares in this name and it gets one of those volume dry up situations, it could be ripe for entering into a position because the fundamentals are very good on this name. Last stock I wanted to mention was, before we get into like our normal discourse, is Twilio, TWLO. That traded down to its 50-day moving average yesterday, and that was on increased selling volume, although the volume was below average. But that's pretty critical support for the stock. Today, obviously, it's breaking down below that. So, I mean, today you'd be selling it. This would be the last point of no return. You'd be out of the position. But that said, you could have sold it earlier, since you can see in the last couple of weeks it just wasn't keeping pace with the major averages. It was going sideways with the down days in that sideways move, such as on February 21st and February 28th. Those were on higher volume. So you had your warning signs, and also this is a stock that's had a massive correction. It's trying to gain some traction, trying to round out its base, but it's coming from a very low part of its base, so a lot of backing and filling could occur before it is able to resume forming the right-hand side of its cup, even if it even does so. So you just have to, we're going to continue to watch this thing to see if it can do that in the ensuing weeks ahead, but this is a kind of name where yesterday, I wouldn't wait for the 50-day for it to break the 50-day, because and today it's down another 4%. This thing's very volatile, so you want to keep your risk under control in names like this, and you can do so by if you pick up some shares when it's trading on the quiet, you could have also sold those shares almost at a break even, so you're really not taxing your account at all, just because it's not going anywhere the last couple of weeks, and the volume is not looking good. There's it's a subtle indication, but there is more selling volume in the sideways move than buying volume. So you don't want to be also sitting in a stock that's not moving with the rest of the market. You always want to keep your money force-fed into names that are going to outperform, and that's why even back in the day in the 90s, and obviously this is a pattern that I continue to this day. But in the 90s, you had a lot of stocks that were doing well, but I was very strict about cutting the ones that were not keeping up. I had no patience for names that were lagging, and sometimes I'd buy and sell the same stock in the same day, just because something new would come through my screens that looked as good or better, and it was fresh. So I would just push that money into the new name, and that force-feeding process is part of the big reason of being able to generate a triple-digit return in a year, because you are going to have your setbacks in that year's time. So the key is to make sure everything's working in your favor when the market is behaving properly, and you're seeing, more importantly, a good number of names coming through. You want to take advantage of them. Timing is critical. And that said, we've got commodities and gold, and just do my little thing here on commodities again, they're not really going anywhere. Gold and silver had a nice run, and looks like they're backing and filling. Not a whole lot to say on that topic. So I think we should just go into our normal discourse, and we can talk about some of the other names on the list.
I think the precious metals are getting busted here. Silver busted the 200-day line yesterday on heavy volume, and gold also, it failed. Notice how it failed at the 200-day line here, Dr. K? I think these things are heading lower, and the Fed is going to raise, I mean, they're pretty much all signaling that they're going to raise rates in, well, this month, actually. So I think that's why you're seeing the metals get hammered, and
well, also bonds. Bonds also got...
bonds are getting cratered as well. So, yeah, and I think that's an issue. So
I think it's pretty standard for where things have been headed. You know, the TLT took a huge drop, you know, a few months ago, and I think that, you know, interest rates are heading higher. I think everyone knows that. And
yeah, so you don't want to be buying bonds.
Sorry?
You don't want to be buying bonds or gold or silver right now.
Bonds are that bull is done, and that was a very long cycle. What was it, like a 30-year cycle or something? A 35-year cycle.
Yeah. What do they call it? The long-term bull market in bonds is over. So that's probably true, but I noticed there's a lot of names in this market that are starting to come undone a little bit, and to me that's somewhat cautionary. So, and the other thing I would point out, Dr. K, when you're seeing rates rising, the reason something like Twilio, I mean, Twilio doesn't make any money, and so it's an infinite PE stock, and so I would be very careful with stocks that have had huge PE expansions with not much in the way of earnings, because I think if the market starts to, well, if rates continue to rise, the market's going to contract the PEs, well, the infinite PEs in these stocks and send them lower. So I think there's risk here. And yesterday, I had some Twilio yesterday. It opened up. As soon as it turned red, I just dumped it. I mean, I'm trying to buy it here at the 20-day line with the volume drying up. But you can see how the selling volume has been relatively heavier. And then I just get out of there. It's like, I'm out of here. See ya. Look at Netflix. Netflix, and there's a bunch of names on our list that's starting to come apart. Netflix broke the 20-day yesterday, and it looks like it wants to head lower. I actually was long coming in yesterday morning. I was long that, and then as soon as I could see it wasn't going to hold the 20-day line, I just, boom, flipped to the short side. I'm actually short it right now, and it's coming down a little bit. Another one that has been on the list but was removed is NVIDIA, and that was a short earlier in the week right near the 10-day line. You also notice it comes right up under this low here. I don't know if you guys can see that. I need a good pen color here. I think the pen colors they give you are pretty feeble, but you can see it comes up into this area here. So it's this low. It sort of represents overhead. You got all the moving averages, the 10-day and the 20-day turning lower. The 50-day looks like it's about to head lower, but this looks like it's heading lower to me and probably going to test the 200-day line. So I'm actually short this one as well. I've been working it short since it broke here. And you get these stutter step moves, and this is a late stage failed base. So there's one leader that has gone kaput, shall we say, and you're starting to see like the box. You know, I'm not going to sit here and intellectualize over whether it's viable here or not. The bottom line is earnings came out yesterday or the day before yesterday, and if you bought this thing down here, going into earnings, you have to decide, are you really going to play earnings roulette? And my answer is, I don't think so on any of these. And Box is also, I think, a company that doesn't make any money, right, Dr. K? Do they have any profits?
Box has no profits until well, not for the next couple of years.
Yeah. So again, you have a high PE stock, and in a rising interest rate environment, you might get a contraction in these names. That's why some of them, you know, I look at them as maybe shorts. The workday looks like it's possibly a short. You can see this. Look at I think we looked at this last week. Did we? No, we didn't. But you can see on the weekly chart, it's this big ugly pattern, and you come all the way back up to the highs, in this sort of pod-like formation, a very steep downside move. Let me make this bigger for all you guys to see. I don't know about you guys, but I have trouble seeing things up close. And you can see that it's a very V-shaped base. It's broken, so you rally up into the 20-day line, and that becomes a short there, and I wouldn't be surprised to see this thing break. Then you look at Splunk, and I've been playing this thing both ways. I'm off the 20-day, got a nice move on Wednesday, but notice how it flakes out, so I flipped short, and now it's sitting at the 20-day. I'm still short this thing. It could break. See here, you got this big pattern, and it's a breakout failure, so it's a sort of a later stage failed base, I guess you would call it. To me, it's just like a base failure. And let's see, I'm just curious, is everybody hearing me okay? Because I'm getting a message from my thing here saying you may be experiencing degraded audio quality in your recording.
You're fine over here.
That's in the recording. Please close any unused internet applications. Well, that's not going to be easy to do. In any case, I think this one has potential to break, so I'm short it. What else? Fortinet's been on our buy list. The focus, it's breaking the 20-day line. It's probably heading lower. It just doesn't. I've tried this thing on the long side. It has no traction. Every time it goes up, they just slam it back down, and you can just feel that trying to go long the thing. And so when Palo Alto Networks broke, it did try to get some support on Wednesday, and it did actually. It showed like a pocket pivot off of the 20-day line. So it's like pocket pivot support. And then the thing just goes, it reverses off the 10-day line yesterday. There's no real volume in it, but there's no buyers. And so it seems to be pooping out on this viable gap up. And I wouldn't be surprised if it heads below this low and maybe heads for the 50-day, or maybe it just fills the gap. But this one I'm also short, flipped on that this morning as soon as it couldn't hold the 20-day line after I had been short it day before yesterday. So, you know, I'm just finding that a lot of these things are flaking out, and just from a visceral experience with these stocks, it's just very difficult to make any real progress. You know, stocks have nice moves one day. Like here's BABA, that's been on our list. So, you know, it has these great moves and pocket pivots, and it looks like it's going to break out, and then it goes nowhere. And that's kind of disappointing. Look at X. This thing, you should buy it off the 50-day, short it at the highs. Look at it, it's coming back in. It's probably going to fail and break through the 50-day line. I think this is a short. You can use a high of the day as a stop. That's how I play it. Let's see, what else? Even STLD, I went short this thing on Wednesday up at the highs, so I figured it's just going to move to the highs on allegedly on the Trump speech or address to Congress, whatever you want to call it. And you know, it does the gooey kablooey yesterday, and it goes below the 20-day line and the 50-day line. To me, this is a short here using the 50-day line or the 10-day line if you want, but it's 36.63, I guess, would be where it's at as a stop. This looks like it's going to bust to me. And that was on our list previously, and we took it off down here when it looked real ugly. It was violating the 50-day, and then it turns back up. But this is so typical of this market. You get these stocks, they look great one day, and then they just fall apart, and then once they look like garbage, they turn around and go back up. Here's another great one, Caterpillar. Look at that thing. Breaks out, fails. Undercuts the lows, breaks out again, fails. Comes back, breaks out again, fails. So it's got to be 3 and out, right? So this looks like a short to me using the 50-day line at 95.18 as your stop. So, you know, I'm seeing a lot of things looking like shorts to me, and a lot of them are stocks that I was playing on the long side. So that starts to tell me something about the market. Let's look at some others on our list. Where is our list? Here it is. CC, how do you pronounce this one? Chemars or Chemur? Is it a French company? I don't know. Chemois?
Yeah.
I don't know. In any case,
so it's probably Chemur.
Holding up. So far, this one's holding up okay, so it must be good. I mean, you know, let's just buy the heck out of it. So there goes Netflix to the 139 level. I think it's 13825. Is the intraday low of the Bible gap up on Netflix. Let's see, but this one's hanging in there, but I'm not going to buy it up here. In fact, I'm not going to buy anything in this market right now because I think you might have some issues or at least there's, at least you need some sort of a correction, and then you could get back to, as Dr. K was saying earlier, will Trump be like Reagan and he'll need more time to get his agenda through, and it took Reagan a full year and a half, more than that actually,
Right.
After he was elected, to finally get some tax cuts in place, and that's what triggered the big rally from there in the 80s. But in the meantime, the market corrected 28%. So we could get a correction.
It was a full-blown bear market in 1981 to 82. I remember my mom would come home from Merrill Lynch and just talk about the recession this, the recession that, and and it was sort of like a broken record during that. The recession went for about a year, and so for about a year I heard about the recession.
Anyway,
finally,
where was I? Okay, everybody says they hear me fine. That's good. I don't know. Go to webinar. One of these days we're going to replace this thing. There's got to be something better than that. Anyways, anybody have any suggestions? Please let me know. Real quick, I just want to go over some questions. Somebody's asking about Dexcom. What do you want me to tell you? Stocks pulling into the 10 and 20-day line. What's the volume rate on this thing? Is it heavy or is it light? If it's light and you think the market's remaining in a bull trend, then I guess you would try and take shares here and use the 20-day line as your stop.
It's minus 1%, so somewhat light.
Yeah, but is this really going to be some hot leader? This is what the pattern looks like on the weekly. It's just chopping in this range, so I don't know.
I think it's too sloppy. It's a very sloppy pattern, so it's the kind of thing where if you were to buy it here and it were, say, to go up to 84, 85, you'd be selling it because it's probably going to reverse course once again.
Somebody's saying bought ALKS, bought at 56 on Tuesday. So what, are you bragging? Is that it? Are you bragging there, Paul? Well, I mean, the stock, you had the breakout in the pocket pivot here, so that was a good buy. That was an alert buy, I would say, and you run up and you've broken out. And in this market, when you get a breakout, what do you do with it? You sell it. So I don't know. Are you just bragging, or do you want us to give you some sort of feedback on this? I mean, it looks okay, but I would say if it can't hold the breakout, just kiss it off and take the trade. So anyways. Try join me. Someone says Ron Brown. Yeah, Ron, I'll have to ask Ron about that. Okay, where are we? I like this AAO, American Optical. This one just keeps going higher. It's going nuts. It's probably going to top soon. How many of you bought Snapchat? They had this thing all over the news last night. Even the local news channels were talking about how this is such a fantastic company, and you got to buy the stock, and your kids, buy a share for your kids, and all this other crap. Pardon my French. And of course they run it up to 29, what was the high there? 29.44. And now here we come. It's coming back. So for all we know, it'll pull a NTNX after it came public, had a big move and then died. And speaking of dying, today it's broken down. Again, more evidence or another reason why, or illustration why you don't need to play earnings roulette. I mean, this thing was acting okay, but if you look at it, it's kind of sloppy. It's just really choppy. So if you bought it on the lows, within this channel or whatever, maybe you could make some money trading it. But I bought this thing a couple of times, and once it went up $1 here, and I got a little move here, and then it rolls over. It's just there's nothing really consistent here. So, it was trying to round out, but it's toast. What was that, Dr. K?
Also, it's a higher risk name because it's not going to earn for the next couple of years. So it's one of these, infinite PE stocks that are more vulnerable.
Yeah.
So, I mean, great. It's got an interesting story behind what it does, but it's a higher risk company. And so, holding this kind of name into earnings, just keep in mind that you are taking on a higher risk because it's not proven yet. And also, you can see that the price action has not proven itself either because it's just on the weekly. You can tell it's just a bit of a sloppy mess. So there's a lot of red flags to holding this kind of name into earnings.
Yeah, definitely. Anyways, what else is on our list here? I got it over here. Let's see. Oh, Barracuda. Cuda is, you know what, I'm going to just move this to another monitor so I can keep it up. Barracuda is breaking support, but it's holding along the prior lows. So if this doesn't hold, this thing's toast. But again, that's why I'm short Fortinet, because I think it could break and fill the gap. So maybe this thing does too. And it's another one where you've had nice, strong days in the stock, pocket pivots, upside volume in the base, and it looks great, and it's been tight, and all this other wonderful stuff, and it's going nowhere fast. So I don't know if it can, maybe it's going nowhere slow, but either way, it's not going anywhere. So again, you have a stock that shows, it has these sort of fits of technical strength and then just kind of poops out. And it's kind of disappointing because you own this thing, you buy it, say, on the pullback, and you see a nice move. So last week you could have bought it at the 50-day line if you were awake and brave enough to do so, and you run back up to the highs of the base, and you're thinking, okay, it shook out, maybe it's got enough to just keep going higher, but no, it just rolls back over. Now you're back below the 50-day line, and it's just not happening. So a little bit frustrating. Facebook acts okay, but to me it's going higher, and the volume is not really there. It's probably up because of Snapchat hype, and so what I would watch for here is a failure through the 10-day line. Maybe it becomes a short. I don't know. Like I said, Netflix looking that way, and it's coming off to lower lows. It had a little undercut and rally move this morning. It undercut this low from mid-February, and now it looks like it just wants to go lower. Okay, what else we got here?
I want to mention something about Snapchat. I got a lot of inboxes on whether it's overvalued, and so when I get enough questions on a topic, and this is obviously a hot topic, it's on headline news, so I'll write something on it, just because I figured it's on a lot of people's on Snapchat.
Oh,
and
Snapchat. Okay, I thought you were talking about Netflix.
The question is irrelevant, basically. I mean, that's how I start my piece, because it's essentially all about the price volume action. It always comes back to that. And I use two examples, although there's many such examples, but the two best-known examples are Google. When that came out, I remember there's all this headline talk about how it was grossly overvalued, this and that, and it didn't matter to me, because Google formed the U-turn pattern. After it was IPO'd, it formed a U pattern, U shape, and then it broke to new highs on volume. And back then, that was 2004, you certainly could buy stocks on breakouts. Certain key stocks would work, and we all know what happened to Google after it hit new highs. And it was kind of like eBay back in 1998. That also formed a U pattern and then gapped up before it hit new highs, and that was your buy point. That was what we would call today a buyable gap up situation. And I remember putting a bunch of capital into it at the open on that gap up day. And then, of course, this was the late 90s, so eBay proceeded to move up, I think, something like 350% in the next few weeks. But the point is that Snapchat, wait for the price volume action to reveal itself, and then maybe you choose to take action. Obviously, we're going to keep an eye on this, and maybe it will form some sort of buy point. We have a number of potential buy points in our arsenal that we would look for when we are analyzing stocks. So that's all you do. You don't have to complicate it by trying to guess whether this name is overvalued or not.
Right. Let's see. Ion. I saw this one the other day. Wasn't it breaking out? Well, it's up. What do you want us to tell you? It's at the top of the base. Sell it. Okay. Next one. Let's go to another name. Oh, Glaucus. Personally, once it can't hold the intraday low, in my mind, if I owned this, I would have sold it yesterday because of the way it acted. As soon as it reversed on the 620, I just would have punted it.
It's also undercut the low of its gap up day.
Yeah, and the volume's heavy, so it's had a hell of a run. What do you want? We put it on here at like $36. It ran to 52 yesterday. I mean, seriously? Really? You're going to sit there and pretend this is some long-term situation you're going to play and buy it in your kid's trust fund account or whatever you have for them? I think it's probably topped for now, and at best it probably needs to build a base. That's what it looks like on the weekly chart, and what you're getting here is probably a big reversal off the peak on the biggest weekly volume in the pattern. So
also at the highs, I believe, of the trading day, and proceeded to go lower from there. So that's where the 620 comes in very handy, or at least just, you know, some sort of strategy that you have to exit the position, because it gapped up something like what, 14 or 15% at the open. You know, and you want to be guarding at least some of those profits, because again, this is a biotech stock, and these viable gap ups are more prone to certain types of groups, and biotech is one of them. You get more volatility on these kinds of names. So, you know, and that's what we saw yesterday. So, you know, you don't want to be giving back, you know, a good chunk of your profits by waiting to the end of the day to sell.
Let's see. Where'd that list go? Here we go. JD, here's another one. It had a gap up yesterday, and it didn't hold the gap up. I mean, this thing's a slow stock. So again, you opened up here around 31.74, and you close at 31.13. So that looks pretty toasty to me. I'd say I'd probably sell into that as well. And another thing I'll do, if I own a stock and I happen to be lucky enough to get a viable gap up move, and I'll look at the 620 chart. If it opens up and it gaps up and then it comes in and you get a 620 sell, a lot of times I'll just dump it. So let's see. All in NTRI. I don't know. All in. What do you mean? I mean, you have a viable gap up. You could have played that way, but I'm not going to buy that here. Let's see. Next one. Momo, they come out with earnings, what, next week? That's right up near the highs, and you sort of a funky base. I'd take profits ahead of earnings, tell you the truth. That's what I'd do. Mosaic, this one failed at the 59. This is a sell, and we talked about this, I think, in some notes that we put out a couple mornings ago, and that's gone. So that'll be coming off the list. Let's look at Netflix is still hanging in there. I don't know. I think it's headed for the 50-day line at least, so we'll see what happens. NetEase, this is an interesting one. This can't seem to hold the $300 mark here on the century mark, because it's tried to get above it a few times and hasn't been able to hold. So you have a viable gap up. The question becomes whether maybe this is a near-term top for the stock, because you can see it's had a big run and you got another breakout here on a gap up move, so it's possible that could be done. So, you know, that's something I'd be wary of here. QTNA, let's see, Dow's only down 8 and NASDAQ's down 0.4, so things are trying to hold in. I think it's still a matter of what individual stocks are doing. So QTNA, funky little stock, trades a couple 100,000 shares a day, but you're at a buy point and the volume's very light if you think you want to step in. But I'm still extremely wary of this name and of buying anything in this market just right now. I think things need to settle down and maybe see some new bases, maybe some new leadership show up. So Square's acting okay. It bounced right off its 10-day moving average, so that's not too bad. But these guys make money, Dr. K? Or do they lose lots of it?
Square, I believe they, let's see, they went positive 3 quarters ago. So they're looking okay in terms of that. I mean, their revenues are doing okay.
Okay.
And they got a good speed.
I mean,
so,
this might be okay.
Higher.
But I know you might look at it if we see the market set up again. So I still think right now you're going to have to see some kind of a correction is coming of some sort. So anyways, let's see. Thor's just kind of trucking higher, nowhere near a buy point. TTD, here's another thin name. It trades at about 350,000 shares a day. This thing broke out. It's just still going. So there are some things still going, and that's one of them. Okay, let's see. See, there goes Fortinet now. It's coming in, 36.28, so it's still coming down. Let's see. Twilio, we talked about. That thing's done. Viva, I don't like this action, frankly, and I wouldn't be buying it. I wouldn't touch this thing. Just leave it alone. It just seems a little goofy here. with the big shakeout, and it's a pocket pivot. But you see how you get a shakeout, and in the old days, if you had a shakeout like this in a stock, what would happen is that you would see the stock just turn and go. And when that happened, you get a breakout, stock moves higher, and you'd be all over it. But here you get this big shakeout, and it goes nowhere, kind of flops back in the next day on very heavy selling volume. You can see that's about more than 2.5 times average. So, I think somebody's selling into this as well, or maybe they sold into it yesterday, they let it go and let it ramp back to the upside. And then now they're back selling it yesterday and then today again, because it tried to go higher today, and now it's trading at the low end of the daily trading range. So, I don't know. This is to me, this is questionable. I don't see if it was going to break out, I think it would have done so after earnings. So let's see here.
Yeah, actually, the other thing is it's taking its time. Usually when you want to see, when you see these outside reversals,
yeah, it'd be a shakeout and it just ram to the upside, and you don't get anything like that.
And things not. So that's a warning signal right there.
Could you please comment on BC? Someone's asking. Brunswick, I don't know. What is there to comment about? It's going tight sideways, holding along the 20-day line. Like I said, though, I'm not really in the mood to start jumping all over stocks here on the long side. Whoops. Going back to my list here. And of course, there's X is going to probably come off this, but I think X is probably a short. And Zion, here's another weird thing, that all the financials all gapped up hard on Wednesday after Trump's speech, but I think it's mostly because you had the Fed heads all babbling about how they're going to raise rates. They're all talking about how March, it's appropriate now to raise rates, blah, blah, blah. So, okay. The financials all gap up, and then they all reversed yesterday on pretty heavy volume. And you see that, Zion, this is just like, you look at one financial, you look at all, they all look the same. So JP Morgan, a little bit of that, Goldman Sachs, kind of going nowhere. So, it's like, I don't know. I'm not a buyer of financials, and I'm not really a buyer of this Zion Bancorp. So it's just too crazy, and the action is all over the place. So it's not really consistent, and very erratic, just very, very erratic. So thoughts on Baidu? Baidu is short. I shorted that last week after earnings, and I got it off like at I forget where I hit it, 181, I think it was 182, I forget, and it actually had. Wait, let me think about this. Yeah, somewhere up here near the highs, 187, 188, I think it was. And it then broke all the way down to the 50-day, so I covered at that point. But, of course, then it goes down to the 200-day. Now you're kind of trapped between the 50-day and the 200-day, and it looks like, well, it's holding along these lows. It looks like it may roll over. So, that's kind of what I'm watching for here on that one. But that's basically it with our list. I see a bunch of names probably going to come off. Well, I know, but several are going to come off this week, over the weekend. So, on that basis, I would be, I would already be out of some of those names, like the Mosaic, like the Box before earnings, like the NTNX, that's going to come off. Maybe Netflix, we'll see what it does today. Trying to hold along here. So I know it's right around 139. But we'll see. So, let's see. Any other TCEHY 10-cent? Kind of an erratic name. It's not one I want to buy. So, like I said, I'm not really in the mood to go long here. I'm more inclined to kind of lay back, test some shorts where they work, and maybe scalp some profits that way. But I think you're living in a slightly dangerous world here right now with the market up as much as it is. So, and I thought it was interesting. There was a graphic that came out in the Wall Street Journal sends out an email every morning, and there's a graphic with all these headlines. And I've noticed, maybe you guys have too, over the last few days is that it seems like, you know, the market's in a permanent bull market, and you never have to worry about selling stocks again. It's just going to keep going forever, and the whole world is thinking that, and I'm not so sure that's necessarily the case. So, you know, the sentiment just seems to be a little bit too bubbly at this point, and with the rising interest rate environment, I think you're susceptible to a correction, and as well, you're seeing it in a number of stocks that are starting to come off, even in the midst of say even today, where you have the market kind of looks like it's holding tight, but you have some stocks coming off. Let's see, what's the advanced decline line is very negative, 11 to 16 negative on the NYSE, and 11, maybe say 12 to 11 to 15, 12 to 15, 16 on the NASDAQ. So you're seeing that negative breadth developing, and I think you know, it's, you just want to lay back and kind of take it easy. Somebody says, are FANG stocks still a good barometer? Well, I suppose they are. Apple's acting okay, but again, these are pretty extended, so I don't even know if they're a barometer of overall market health as much as they are a barometer of money needing to move into this part of the market and just have exposure real quickly. So Amazon, same thing, but you know, Amazon is right at the top of its base, and it could fail. That's a possibility. So, you know, like I said, it's a little bit tricky here, and I don't know if you guys have noticed, but it's tough to make any real progress. Things get moving one way, and then they just flip out and go the other way, and it's just hard to make any real big money. So you just end up beating your head against the wall, and you could be up, you know, a few percent, you could be down a couple of percent. Either way, depending on what stocks you are at what time. If you're in the right ones at the right time, like if you're in Twilio a couple of weeks ago and it was jacking off the 20-day line, you made some money, and if you got into it a couple of days ago, you lost some money. So there you go. You know, it's just a little of this, a little of that, and a whole lot of nothing, and I think that's really what you're looking at in the market. So Google's another one. They had a pocket pivot on Wednesday. Look at that. You have a pocket pivot off of the 10-day line, but you go nowhere. You come right back down. So Priceline, let's look at that. That had a viable gap up on Tuesday after earnings on Monday, and that's holding up okay, but it's not really where I would be looking to buy it, and I'm not even sure I'd be looking to buy it in any case. So, you know, that's sort of the rub right now. And I think you could see this market, even though we're roughly flat, we started up this morning, and then we rolled back down, and then I think you went down, what, 30-something on the Dow, and now you're back down to -6. We actually turned positive for just a second there. But I don't know if you can really go by the canaries anymore. I think money just flops into stocks, and just because X is acting well for 2 days, is that a canary telling you that the market's healthy? No, because it just flips out and goes the other way. So I don't even think that stocks you might consider barometer stocks really have any predictive value in terms of telling you what the overall health of the market is. And I think that just shows you how screwed up the market has become. So that's what you're dealing with. Right, Dr. K?
It's interesting because, you know, the market was pretty screwed up with the advent of QE in 2009, but then we were able to negotiate that very well, and, you know, all the way through 2011, especially with all that volatility, which worked in our favor. And then QE3 started in 2013, and that's when the S&P went on an unprecedented move where it would never develop any material corrections or any material upside moves. You'd have these little short, you know, what I used to say, the market likes to take 3 steps forward and 2.5 steps back. And those 2.5 steps is just enough to push you out of your position. So
right.
You know, then it finds its shallow floor and moves up again. And it's no wonder that you know, the market timing sites universally, I've looked for one that's been able to hold its ground. I can't find one. And the market trend following wizards, you know, the collection of guys who've been interviewed in Jack Schwager's books, Market Wizard books, etc. You know, they've more or less since 2009, I think they've underperformed, not only underperformed, but they finished the year in the red in every single year except for 2 of those years. So, you know, that's unprecedented for their trading careers, because, you know, these are guys who've been doing this for, you know, typically well over 20 years. You know, so it's another barometer that things are not sanguine whatsoever. You know, things are still manipulated. And you know, I know QE ended obviously in the U.S., but the fact of everything being interconnected means that the Bank of Japan and the European Central Bank are still printing, and by a fair bit, and a lot of that capital does find its way into U.S. stocks. So U.S. markets are obviously still being manipulated vis-a-vis these foreign central banks. Bill Gross, who used to run the PIMCO fund, he wrote an interesting piece the other month. He does a monthly write-ups, and he talked about how if central banks were to just end their QE programs right away, that would cause serious corrections. So, you know, my view has been that that these banks have indicated moderation and possible slowing in the many months ahead, so they don't jar or upset the apple cart.
Yeah, that's what they're trying to do, and so that would be in the interest of engineering a soft landing, which, as we know, they've never really done that in their history. So, correct?
In the history of massive amounts of money being printed, we've never had a soft landing. It's always been pretty spectacular in terms of the amount of volatility that comes as a result of where we stand today.
Yeah. So it's difficult, and you can sort of see that in the action. And you know, I'll start making a few percent on the upside, and if I gas it, I'll get hit. If I take my profits and everything comes in, I can think about things again. But it's still hard to make significant progress. And my view is, if I'm up 5 or 10% in a year, that's basically flat. You know, I could be down 5 or 10%. I usually don't go down that much, but even like 2 or 3 or 4. Basically flat either way, and so there's nothing really to sink your teeth in. You know, there's no big moves in stocks these days outside of Nvidia last year, and back in 2012 when we had Tesla was on a run. Speaking of Tesla, that's been one we've talked about on the short side, and to me it looks like it's a short. And again, you get this situation where, you know, a stock, look at the rapid run up off the right side here, and you come right up to the highs and you roll back on very heavy weekly volume. So that becomes a short right there at the 20-day. If A, you could borrow it, and B, you were noticing what it was doing, you could have hit it right there, and boom, you would have got a nice breakdown of the 50-day. You cover it, it rallies back up, and now it's hanging out. This stock could easily be done, and maybe now this is when it tops. But I'm willing to just operate on the basis of the technical action. We could see way back here it was turning, so you could have actually bought the stock here, and we talked about this when it was at the 200-day moving average on a roundabout pocket pivot, and you would have got a nice move. And if you sold ahead of earnings, you did pretty well with that. So, you know, you can get nice moves, and a lot of these moves, that's how they occur. It's like the Momo, you know, the move you could have got off of here, buying along the 50-day or even lower on the bottom fishing pocket pivots. There's your move. And like Weibo, I'm wondering if Momo is going to be like Weibo, which is now reversing, and it looks like a short because it's a late-stage failed base. I thought it might have a shot at getting above the 20-day, but no such luck. But see, that one you could have bought down in here on a pocket pivot along the 50-day line. You would have gotten a nice move out of that, about 20% on the breakout, and then you sell the breakout, and then the thing blows up on earnings, even though they came out with what was a pretty strong earnings report, at least from what I could see. But apparently somebody didn't like it because they hammered this thing on huge volume. So, you know, and there you go. So you think you have a big winner, and you're going to hold it for that multi-year gain and all this other garbage, like the guy I know who still owns Acacia, and who told me back when it topped and when it broke the 50, and I said, you know, that's pretty much it for the stock. And, oh no, I don't operate on a short time frame like you do. I have a longer time horizon for this because this is the next Cisco. That was Acacia. Okay, more recently I've heard Nvidia is the next Cisco, but you know, I think that's just dumb, and you're just
also indicates a mindset that has become married to the stock,
right,
and that is a recipe for disaster. Because every Cisco that comes around is like, you know, it's once every few years. Meanwhile, there's thousands and thousands of names that don't measure up. So the odds are extremely against you to adopt that kind of mindset. Again, it comes back to the basics. Watch your price volume action. That'll tell you where to exit.
Yeah, I know somebody who bought this thing at around 4 or 5, and I think 5-ish, somewhere in here, and then they got this immediate move up, and then when it reversed heavily like this, and I asked them, well, you're selling this thing, right? It's like, oh no, I'm doing what Jesse Livermore would do. I'm holding this for the big move. And if we look at this, that was the big move right there, apparently, and that was a climactic type of move, parabolic, and if you didn't see that, you were either married to the stock or just plain old blind, because this is what the ensuing move looked like. As I scroll to the right, oh, going lower, now we're at 250. Oh, it's going lower, now we're at a buck and change. Now today we're still bouncing around here. Oh, we're heading back to 1. Is this brutal or what? Now the stock's at $1.07. So 80% of that guy's money is gone. But of course, when I told him to sell it, he scoffed at me and said, well, I don't have a short time horizon. I'm not a trader. And you're not much of an investor either, I would add. But, people just get married to stuff. I remember the guys at O'Neill, a couple of the, or at least one of the institutional salespeople bought, what was a company that Carly Fiorina was the head of before she went to HP? Somebody help me out. I forget what the name. It was a telecom company, but in any case, that stock was like $100, and he had bought it up there. And I remember it started coming down. I asked him. It was well, I'm not going to mention any names, but you know the guy, Dr. Kate. And I asked him, well, are you gonna sell this? And he's like, oh no, I'm holding this for the long term. He had it in his kids' education accounts too, and the stock basically went down to 5 from there. So I don't see any reason why you need to marry stocks. You just operate on the basis of the action that you see in real time, and basically take it from there. And don't get hung up on some long-term view, because the reality is you don't know what's going to happen long-term. You only know what the stock's doing short-term, and it's always possible to buy something back if it sets up again. And what I'm going to demonstrate at the conference next weekend? No, 2 weekends from now. I'm going to show how you could have played NVIDIA without having to sit for the whole move the whole way. You could have come in and out, or out and in, or I don't know, both ways, whatever, and done okay, and captured most of the movement in the stock. So there's a way to do it, and I think it can be done without exposing yourself to the risk of trying to sit there forever. And even if you are thinking you have something that might have long-term potential, the bottom line is that's your opinion. And if it shows you something in terms of a big break and a failure on a later stage base when the whole world is bullish on the stock, then you damn well better get out of the way and just unload it. And I know people who bought Twilio, and that thing was a monster. It was going, this breakout was going to take it to 100 and blah blah, and you just hear all this stuff. NVIDIA too, another Cisco Systems, but nobody knew Cisco Systems was Cisco Systems when it was Cisco Systems, even though it actually was Cisco Systems, but it wasn't, if you know what I mean. It had not had its legendary price move, and now people just want to get bullish on NVIDIA for no other reason than that they've decided it's the next Cisco. But if you look at the pattern, it's had a heck of a run. It's showing some signs of topping, and if you look at the weekly volume on this, you can see that you're getting a lot more selling up here than you have throughout the pattern, and that's telling you that look at this, compare this selling down here to anything along here on the way up. Nothing. So this is under distribution. So in my view, any bounces are probably just shortable, and I'm working this on the short side. I intend, for now, until I see evidence to the contrary, I intend to campaign this on the short side for some time now, because I think it could at least head for the 200-day line. So that's what I'm looking for. And if we get into a correction, that's likely what will happen. So, but I'll let the action will tell me what to do. If I start seeing that it's stabilizing and maybe there's a long setup, some sort of voodoo action or something, I'll just get out of the way, take my profit, assuming I have one, and just walk away and leave it alone. And that's what I'll do. I'll operate on the basis of what I'm seeing in real time. But I'm amazed. There you go, Lucent. Thank you. Yeah, is Lucent still around? No, it's an invalid symbol. Well, that's a good sign, I think. Well, looking at this one, here's Activision. It's trying to hang in there. That had a nice move on Wednesday, and it actually held up. One of the few that I've seen in this market. So, anyways, So that's really, all I have. I've shown you a few short sale ideas, the steals, STLD, X possibly. I'd watch all of these, data is one. I thought this was possibly a long, but that's another one to flip short on. It's breaking the 20-day line. See, and I'm afraid that's what something like a Fortinet is going to do. Well, it's doing it. And just break down after a gap up, and you've got nothing left. So that may come off our list as well, because it's not really holding up, and you've gone sideways for a full month after the gap up, nothing doing. So to me, it seems like it's heading back towards the big moving averages, the 50 and the 200 day. So, and that's just what it looks like. So Lucent was bought by Alcatel, thank you, back in 2000. Yeah, well, they got a good price for it, and the fellow who owned that stock and decided they were holding it forever because it was a great company, saw most of his money in the stock disappear. And I see that so many times. Some people right now know someone who's in love with Tesla, and they're expecting a 15% gain in the stock. I don't really understand how you come up with that, because I'm trying to do math on it and I can't come up with anything like that. So I have no idea. All I know is you had this very rapid price run up. You went right to the top of this big sort of mountain range top, and you've had these moves like this, very sharp, and they don't last. So this one's suspect. My guess is at the very least this stock is going to have to build a new base, and I don't know. I think they're going to come back to the capital markets for the secondary offering, and that's going to gap it down when they come out with one. But they're on the verge of burning through all their cash. Another thing is, for anybody who paid attention to their recent earnings report, when they bought Solar City, they represented to Tesla shareholders that they were going to produce something like 980 megawatts of new solar panels or whatever installed. And and so that's over 3 quarters. So they came in with like 200 something in the most recent quarter. So they're not even living up to that billing in terms of the tremendous growth they're supposed to have with Solar City, or what we're claiming is going to be their growth. So you got to wonder about these guys. Elon Musk constantly tweets to get the stock moving. There's a lot of hype around certain things, and in the end, it's got to be viewed as a business that either makes money or doesn't. So far, they're just losing money hand over fist, and they're going to have to come back to the capital markets. So if they throw more stock and dilute shareholders again, throw more stock into the market, this thing's got to come off. So, you had a nice move. I would take that and move on and see, maybe it sets up again, maybe it doesn't, and just go from there. So anyways.
The thing about Tesla is, well, Elon Musk, it reminds me of Bill Gates in a lot of his strategies, in terms of, how Bill Gates would put defective software out there just to be first in. And I think Elon's got a very similar attitude. It's a race, and so he wants to be first in the headlines, etc., and apologize later, and hopefully that his R&D catches up with his claims.
Yeah.
And that was a very effective strategy naturally with Microsoft. I think he's trying for the same thing. I also wanted to point out that Cisco was IPO'd in 1990. And it was off to the races. It did its huge move from 1990 to the market peak in March of 2000. That was its big move. That was also one of the strongest bull markets we've ever seen. So even if, let's say hypothetically, NVIDIA is the next Cisco, whatever, we're not going to, the odds of us repeating the 1990s as strong as they were, I think, are incredibly low. And if the market lags, or it has fits and starts and stops and more bear, it has some appreciable bear markets in there, which I think it will, compared to the 1990s, then it doesn't matter if NVIDIA is the next Cisco. It's still not going to perform like Cisco did in the 90s. No, not anywhere close.
Yeah, so those kind of comparisons are trying to label something as the next whatever, and therefore it means you just hold it forever because you've determined this through some magical crystal ball. Then I don't know. I'm not buying it. Anyways, I guess when Alcatel bought Lucent, they smashed 2 broken companies together. There you go. Okay, yeah, there we go. Okay, market coming off now. I don't know. I think this market's got problems. So
Gil, you still there?
Yeah, I was just putting a trade on. I've been watching Mobileye rally, and so I'm getting the kind of a MACD cross here, so I'm going to put it out. Mobileye is looks like this. It looks strong actually, but it's kind of a big pod-like formation, so I'm going to see if I can put some shares out right here. Filled at 4673, 4, something like that, so we'll see what happens. Starting to roll in a little bit. We'll see what happens. I could be wrong here. But this is what it looks like. Well, that's a 1-minute chart. Yeah, that's how this market's gotten. But you get the MACD, you get a stretch, so this one didn't work, and it held the 6-period line. Here you're breaking the 6-period line, so I'll give it a shot, use the 4.7 level as a tight stop. So market's coming off 21 points on the Dow, so we're rolling back again. So we could come off more, but I think you're just going to pull back. I think you're seeing it in the stocks, and that's the first place you want to be looking. So and so if you're long something, just know where your out points. It's pretty simple. If you avoid getting sucked into a big 300-point down move like we had on Wednesday, and instead operate solely on the basis of buying stocks at the low risk points within their patterns, then I think that you're okay. If you chase things and buy extended, you get a correction. Remember, a 2 or 3% correction in the Dow is going to be 600 points. So that's going to be brutal when it happens. So, I mean, in terms of the visuals, the opticals, I guess you might say. So let's see. Well, the market started to sell off. Now it's starting to bounce back. So, but again, here you just have this crazy volatility intraday as well. So anyways, Yellen just announced that they will raise rates soon. Okay, so you're going to get a little reaction bounce. Maybe the financials are leading it, and then we'll see what happens. So okay, but I think I don't really get that because all these Fed heads have been out the last few days pretty much saying the deal is sealed. So we'll see. We'll see if this is just a little fake out and then we roll over. So anyways, that's all I've got. We've gone over our time. I've given you some ideas on the short side. There are some things trying to hang in there on the long side. You might keep an eye on the stocks that act better. Otherwise, I think, tread lightly and play a strong defense. I think that can be a lot more important in a market like this than a strong offense. So anyways, that's all we got. You guys, thanks for showing up. We'll catch you next week. Have a great weekend.
So long.